About 2 crypto influencers on X have called on their followers to snap up Bitcoin, gold, and silver, citing the risk of rising national debt in the United States. In an X post on March 11th, entrepreneur and angel investor Balaji Srinivasan argued that Bitcoin is the only realistic solution to escape the inevitability of unsustainable government spending and potential asset confiscation. We're in the looting the treasury phase of imperial collapse. The former Coinbase chief technology officer told his 994,000 followers, and that's just several markets, right? And so that's not, we were saying like our economy to positive debt has many signing up for the mission by identified that is constantly seen in this case. Balaji, a general partner at Andreessen Horowitz, said, there are 4 approaches to the problem: deny it is happening, fix it through political processes, give up, and simply feed yourself at the trough. Or the last is radical but actually realistic. He said, adding that government deficits are now at $10 billion per day and growing. Rich Dad, Poor Dad author Robert Kiyosaki also advised being prepared and investing in store value assets such as Bitcoin in a March 11th post but despite how many people have done now. Meanwhile, Balaji also warned that as financial reckoning approaches, the ravenous state may consider confiscating private assets. And Balaji offered a handful of examples, such as the seizing of assets from protesting Canadian truckers, freezing Russian assets, and the truth weaponization of Delaware against Elon Musk and New York against Donald Trump. Private property will not be protected by the state in a bankrupt blue America, he said, before adding, in March 2023, Srinivasan famously bet $2 million that BTC would reach $1 million by June of that year due to hyperinflation in the U.S. and a large amount of economic and inflation data will be released in the U.S. this week. Figures include February's adjusted core CPI, February PPI, producer price with index, and one-year inflation rate expectations. A hot CPI inflation report this week would really set the tone of the March Fed meeting, commented macroeconomic outlet the Kobisi Letter, and Chicago Mercantile Exchange data shows the probability of the Federal Reserve keeping interest rates unchanged on March 20th is as high as 97%. Interest rates in the U.S. are currently 5.5%, where they have been since July 2023. Now,